Alright guys, and welcome. I hope you had a wonderful week. So this is my trade recap for the week, and I'll be walking you through the trades I took and why I took some of these trades, usually on gold. And this is M5 scalping, and I don't think I've taught this before for everyone that is using the TrendIQ, but this is the time we do it. Okay, so when I'm scalping, at times I scalp on M15 and M5. Okay, so I just look for whichever gives me my most probable entry and I go in. Now we all know that gold has been moving really nice. It has been creating all times high, very close to $5,000 per ounce right now. So let's get into it. So I started on Thursday, which is my scalping for the week. On Thursday I had a very busy week, and so literally I started on Thursday overnight. So at around 2 a.m. I got this signal. Okay, I got this signal here. This is 3 a.m. and that's around 2:20, the buy signal. So as usual, for those who understand the rules of our engagement, when you get a signal, you come to the chart and you look at the room for possible imbalances, and that is where you're going to enter. So I looked at the chart and I observed, yes, there is imbalance here because this is where the buy entry was. So there's imbalance between here and here, so I know that I'm not supposed to get in here because the signal would actually come before the close of the candle, but I always rely on the close of the candle before entry. So what did I do is I observed that there's imbalance here, so I felt like, okay, we are definitely going to come down to fill this imbalance. Then I come back and look right below it here as well. You can see where the arrows are, so I looked right below it and observed that there's still a little imbalance here as well. So because of this minor imbalance, which is between here and here, I felt okay, that we like it or not, let me expand it so that you can see it easily. Okay, so this is the minor imbalance I'm talking about, so which is between this distance and this distance. So I knew gold most likely will still come to fill this imbalance, so that is why I'm putting my entry around here. So you can see that my entry is at the body of this very candle. That is what brings my entry here. So I placed my entry down here. Okay, you can see at the body of this candle here. So this candle here, body here, that is where I placed my entry. So for my stop loss, as you know, we target the last two lows. Okay, last two lows for our stop loss. So if you look at where I entered from here, if you look at where I entered, so this is my first low here. This is my very first low. So just to make it easier, let me just highlight it. This is my first low. So where's going to be my second low? Because my entry was basically around here. The entry was here. This is my first low. So if you look at it, my second low is actually this one here. That's pretty far. It's pretty far, but then this is my second low. So I came in and I put my stops just below it as well, because at times you don't want to put it on the second low immediately. If you put it directly on the second low, there are times where the market will just come and weak you out, and you just lose out from the trade, and it's still going to go your direction. So I just give it a little gap, little distance below. So let me just delete these two. So that's where I put my stop. And for my profit, usually, I first target one-to-one risk reward. So my one-to-one risk reward is around here. You can see my one-to-one risk reward is around here. You can see this is where I got my one-to-one risk reward. But at times I still let it run. Why? Because I look back and I look at all these highs that were created here, and I feel like, okay, gold should probably get here. And obviously gold is in a very bullish scenario, but on Thursday it had a very corrective move, which is a normal move, which is it tries to give us room for entry, which is what we call a pullback. So I was targeting 1 to 2 again here, since I knew that yes, gold is still on a bullish move here. So but my initial target was 1 to 1. After 1 to 1 I break even, so I'm good to go, and I just leave whatever is left to run. So that one was running and I still got another sell signal. Now the thing about scalping is both buys and sells, you are taking each and every one of them. Okay, so even though the dominant trend is bullish, you're still taking sales as they are coming. So um that's just it. So I got this sell signal here at around 10:45 a.m. that's in the morning, and looking at it, I checked the chart and I'm like, okay, where are we in terms of good? So my obvious imbalance are here. You can see, okay, let's zoom in because of the fact that we can easily do it now. So once we got our sell signal here, this was where the sell signal came in. So yeah, it's looking like it's already late for a sell here, but then that is why we have rules. We don't blindly follow signals. We have rules that we follow. So I looked at the chart and I obviously saw that, okay, there is an imbalance here, so gold is definitely going to come here. And I looked higher and I saw that there's still a minor imbalance here. There's a minor imbalance here. In fact, there's still a little one here, very small one here, between here to here, very small one. Okay, so I know that there's a chance that gold is going to come in here to this very place. So I put my entry on this very weak candle here. This week, it's called a week. Okay, on the week of this candle. This is, I think, reverse doji or something. That's the name of this kind of candle here. So I put my entry just about this area here. So just about this area here. So this is the entry, and you can see that gold actually came to my entry, came in. And where did I put my stop? As you know, the second eye. So this is the first eye. This is the first eye here, which is for my stop loss, and this is the second high. So and I also gave it a little distance as usual. So what happened was gold came in after the sell here, which is the sell here. Gold actually came in and gave me a solid 1 to 2 risk reward. Now 1 to 1 was my actual target, but then I looked at this low here, and I know that okay, there's a possibility of gold getting to this low here, so give me the room for 1 to 2. So I got my 1 to 2 here, and I just break even whatever is left. After taking my 1 to 1, I break even whatever is left, and I let the remaining run. So later in the evening, I got another buy signal, which is around 3:35 p.m. So I got another buy signal. So I came, I looked at the market. I'm like, okay, do we have any imbalance? Because what we need majorly before we can enter any trade are imbalances. So do we have any imbalance? So I looked at it. We have an imbalance. Yes, we have a minor imbalance here. We have a minor imbalance here. So then do we have another imbalance below? I couldn't find another imbalance below. Everything is pretty balanced. So there's a minor one here, but everything is still pretty okay. So the chances of gold coming down here is what's it called? Very slim. So yeah, I did not put my maybe I deleted it or something. But then this is how this trade played out here. Let me just show you. So I find my entry where the imbalance is, which is going to be the body of this candle here. That's where the imbalance is. So I'm going to put my buy stop here. My stop loss is definitely, this is going to be my first low. This is going to be my second low. So my stop loss usually is going to be here. So this is my actual 1-to-1 risk reward ratio. Then do we look back? Do we see the possibility of gold going higher? Yes, there are possibilities of gold going higher, reaching up to this area here. So which means we could have gotten our 1 to 2 from here. But usually after 1 to 1, I break even, I let the rest run. Okay, so and the race here is not for the swift but for the golden. So you can see how well this trade went. This trade went so high. I think the reason why I deleted the buy signal stuff there was because I had to expand retract my chart. So that was how this one gives us a steady 1 to 6 risk reward ratio. Though when I say 1 to 6 risk reward ratio, you need to understand that the what's it called? I may not get the whole 1 to 6. Yes, the give 1 to 6, I may not get the 1 to 6. Usually, you get maybe 1 to 5.5 when you get 1 to 6, because I try to trail my stop for whatever is left, which is usually around 50% of my initial position. I try to trail my stop at what's it called, at 0.5 hour away from the current high. Okay, I don't want to go into full explanation of that because that's not why we are here. So going forward, we got another sell signal here. This is where we got another sell signal, which is around 4:20 p.m. So I looked at it. Obviously there's a huge imbalance here, very huge imbalance. So where are we going to put our entry? We're going to put our entry here, our stop, which is our high 1 here. Then this is the second high. I actually do not want to take this high as my second high because it is just too close. Like it is just too close to this high. Like you can literally call the both of them one. So I chose this as my second high, and I put my stop here. So you can see the trade here. So I put my stop a little bit above that high. So what happened was that market came in here and gave me the sell. Yeah, it was very close to my stop loss, very close to my stop loss here, but it gave me that sell, and the sell was profitable. If I expand it, you see that this sell was profitable, but the reason why I deleted it was because I wanted to show other thing. But you can see it gave me a solid 1-to-1 risk reward ratio there, and that is all I had on this trading. I didn't even have 1 to 2, it was just 1-to-1 risk reward. So that was a profitable trade. So I got this buy signal as well. Like I said, this is scalping. You take every signal available, you put your stop loss and everything, and you move on. You understand? You put your stop loss and everything, and you let the trade run. So my 1-to-1 should be around here. So I just got the 1-to-1 on this one, and I walked away. So Then I got this buy signal. Yes, this buy signal here. Obvious. This is okay. Let me just retract this a little so that doesn't disturb us. Okay, so this was the buy signal. It came here at this high. Of course, you don't go in at the high, so you wait for, you look at possible imbalances here. So there is one here, and then when you look down here, you observe that yes, this is where I could get my better entry. I could have gotten, but I've put my entry here, but I thought, okay, why not on this bearish doji here. So on this bearish doji here, so I just placed my entry very close to it. You can see where my entry is, very close to it here. So and what happened on this trade was I lost this trade. Yeah, so there's no system that is perfect, that is 100, but then the win rate of our system is very high. So you can see obviously I had this buy trade and I lost one hard here. So then we later come here, we got this sell signal here. Now this is a very interesting one. It's a very interesting one here because we have very minimal. Now someone will ask me that why didn't I put my entry here? Because as I got this sell here, I was looking for an obvious what's it called, obvious um imbalances. I couldn't find it so obvious. Yes, there's one here, but why I did not put it here was because I was considering this bullish candle here. Okay, so this bullish candle was giving the vibes that the old what's it called, this very candle here, this very candle in the middle here was giving the vibes that the whole of this movement might not come back here, might not come back here. So I'm like, okay, this one is clean already, this one is clean, so this is already filled, so then it's just this place to this place. And I'm like, okay, let's just put it where we found the entry. So I just put it at the what's it called, at the low of that candle. And of course you can see that the market first went back up trying to fill the imbalance here. As usual, the market does that before the market comes down. Now because my stop here is large, my stop here is rather large because I took this trade from 4,950 $45, and my stop is at $4,967. So my stop is rather large here. So my target was just 1-to-1 here, and I got my 1-to-1. So which means that the loss which I had here, was compensated here because my risk to reward ratio is usually static. Okay, so then we went forward to the what's it called, we went forward, going forward, we got here. This is the next day, Friday to be precise. We got a buy signal on Friday. Gold is already bullish, everybody knows that. So since I got a buy signal here, which is at this area, and I looked here, there's a very minor, very negligible imbalance. I felt like, okay, just put it here, no need looking down. So I put my stop here, I put my entry here, then my stop, as you know, this is the first low, here, this is the first low, then this is the second low. So I just put my stop at this second low as usual, and I give it a little gap, as you can see. So and this trade was, gave me a solid 1-to-5. Okay, solid 1-to-5, but I probably took 1-to-1 out of it, I think, but gave me a solid 1-to-5. Then going forward, I got another sell, which was yesterday evening. I got another sell yesterday evening. So obvious market imbalance, and at the time of the sell, this was the time where the sell trade was triggered. So there's an obvious market imbalance which is between here to here. So definitely this one is getting filled because it is huge, and we know it is going to get filled because it is huge. So what did I do is that I took my entry at the body of this very candle that the imbalance is created after. So I took my entry at the body of this very candle where the imbalance is created. Let me zoom in for better view. So this was the sell signal. So this was the candle that was not balanced yet to this green candle here. So I just had to take my entry at the body of the candle, as you can see, at the body, very close to the body. At the body, that's my entry. So as you can see, it was a sniper entry here. It was a sniper entry that gave me solid 1-to-3. Now how did I get 1-to-3 here? Like I said, I look at my what's it called, low 1 and low 2. I put my stop loss above those two highs. Sorry, that highs this time around. So this is the very first high. This one here is the first high. Where is it? Okay, so this is the first high, and this one here minor but higher than the first one. So this is the second high. So I put my stop there. Now I looked down here. I saw what gold has already done before. Like gold has already gone this low before it gives that reversal, and I observed that even at the reversal, it created another imbalance. So which I know for sure that yes, later or sooner imbalances get filled. So there was an imbalance here, which some call fair value gap, whichever one you choose to call it. So I knew gold would get down here. So my target was just around this low. I did not want to take the lowest of the low because I know that it may not get there. But then suddenly it actually got there and bypassed it as a matter of fact. So giving us a clean 123.7 here. So this is now the latest signal I have on gold, which is not yet executed. So you can see I have around yesterday evening, I have this entry, which is a buy signal around here. So, and as you know, I looked at the market and I saw the market as an imbalance. You can obviously see there's an imbalance here between here and here. If I just this place to this place, you know there's definitely an imbalance. Okay, so I just put my entry at the body of this candle here, which is here. So at times it's a little bit higher, at times a little bit lower, but the target is at the body of the candle. And you know, as usual, what we target first is our one-to-one risk reward. So our stop loss is low one. This is our first low. You can see our first low here, and this is our second low here. So then we just put it just below the second low. So our first target is one-to-one risk reward. You can see my risk reward is still one-to-one because we've not even moved at all. So if we move and one-to-one gets give us profit, then I can maybe target anything higher. But now gold is making all-time high, so anything that is higher here is just ATH going into play. So I don't have a um how do I put it? I don't have an anticipation of okay, this is how high this movement is going to go. So I don't have an anticipation of it. So this is my overall recap on gold, and I'm going to be sending this video unedited. Maybe if I edit it, I'll probably put captions so that people that may not hear what I'm saying may read from subtitles. But I think I'll just leave it raw and send it to you because I like to give you information first and without me trying to show you anything special, anything different. Just everything as raw as it is. For transparency's sake. So that's going to be all about the video. Thank you once again for getting this TrendIQ system, and I'll see you later.